Hello, everybody. Hello, all 12 of you. It's always interesting when I go live, it usually starts out at like 12, 15 people, and then instantly goes to like 4 people. I don't really understand how that works or what the algo is behind that. But no, it's holding steady at 12 people. I think there are 12 actual human beings watching this. Elon, right? There's no bots on my YouTube. I thought I would do this because a lot's happened in both Coles and Twitter since the last time I did one, and it's worthy of an update. And I might talk about a few other things too. So, oh, and I gave myself a haircut for you. Look at that. I used to have hair. Now I don't. Coles. Very interesting. I know I told you in my last YouTube that I got long it again, and I am no longer involved in Coles except for some 1x2 call spreads that I think I mentioned last time I put on, which I don't have a lot of capital exposed to it. So you can't really put those on now that we know what the price is, if it happens. But look, this is a very odd situation, right? The fundamentals of Kohl's are deteriorating rapidly. So the near term outlook for the business is poor. You have all other bidders have dropped aside, and all you're left with is this kind of vehicle, this public company vehicle that only has $1.5 billion market cap. That there's no real synergies between them and Kohl's versus J.C. Penney and Hudson Bay would have had huge synergies with Kohl's, and they don't see the value there at 60 or at any price, given where the fundamentals of the business are and where the debt markets are. Now, what FRG is attempting to do is do a giant kind of leverage buyout with no capital up front. And wow, it's now up 10% on the news, which bodes really well for Kohl's if the market's that receptive to what's happening here. I'm surprised. So basically, they're going to not put up any money to acquire Kohl's. They do have $1 billion of debt that's going to be recourse to them, which is a lot when you only have $1.5 billion market cap. But no actual equity dollars are going to be put up. And all the rest is going to be financed through mostly real estate kind of sale leasebacks. That's most of it, I'm guessing. And then some traditional debt financing from the banks. Well, first of all, the risk now of the board, of Kohl's board, rejecting the deal at 60 is virtually zero. They wouldn't have got to this point with a press release that they were actively considering it with another public company that put out a press release pending due diligence and financing if the price wasn't there. So they clearly have already taken a vote at the board level that $60 is enough to get this done, pending satisfactory documentation and them being convinced, I'm sure, that the deal can actually close. Where you have to be skeptical is, will the financing hold up? Will they be able to close on the financing in the next 3 weeks? And I don't have a strong enough view to tell you that that can happen in this market and in this retail market. Now, the stock's only trading 45, right? And if they sign the deal at 60, it probably goes to 56, 57 maybe. It'll have a decent spread given how crappy Kohl's business is and how long it might take to close. So let's say it's like 11 up, and then it goes to 35 with no deal. It might even be a little better than that, but let's say 35. So it's only pricing in a 50% chance of a deal happening right now. So it's not like it's pricing in what it should be pricing in a normal environment. If you get two companies putting out a press release saying what the price is going to be, and then it's just pending the remaining due diligence and financing contingencies. So on the margin, I'd rather be long it than be short it today. but you don't have to, if there's any lesson I could tell someone when they get involved in the stock market for the first time, they're trying to learn, is you don't have to own or be involved in every stock, right? There's 10,000 stocks out there. 9,990 are going to be do nothings, and 10 you might get involved in, or more if you have a more diversified portfolio. So it's hard in special sit land to just pass on things left and right, because you always want to have FOMO, but you always will have FOMO depending on which way it goes. But that's just what you got to do when the conviction's not there. And in this situation, I don't understand why this buyer is so unique to be able to pay this price when the other buyers can extract huge synergies. I mean, I think I read that the JCPenney buyer could have had $1 billion in synergies, which if you capitalize it at 6 times, it would almost pay for the whole deal, just the synergies, before you do the sell leasebacks and all the rest of the stuff. As Glenn says, so only one bidder willing to buy asset, basically only using that asset to finance the bid. Something wrong with that picture. Yeah, that's my concern, Glenn. It doesn't seem like the other savvy people that would be interested in this have completely dismissed it at this point, given the environment. And my concern is that the board has to show that they really tried hard, because they lied about the condition of the business when the proxy was when the annual meeting was in May, and the activists are trying to take over. So the board has to do everything it can to show that they really tried to get this thing over the finish line. So, if it falls apart because of financing now, or because the buyer walks away, the board could say they tried. Now, the FRG being up 10% today bodes very well for the deal eventually being signed. I mean, clearly people like the financial engineering that's happening here, right? They're putting up $1 billion that they don't have to raise. So it's just going to be borrowed against their existing asset base. And it's going to be this crazy stub levered equity that, if it works, in theory, that billion will be worth, 3-4 billion in a couple of few years. If it's worth 3 billion, the stock more than doubles, right? It's only $1 billion market cap. For that to happen, you have to turn Kohl's around, obviously, but it definitely could happen, right? But on the flip side, if Kohl's went bankrupt and they lost $1 billion in recourse debt on $1.5 billion market cap, you just destroy 2/3 of your equity base, in theory. So it's, I'm sure the guy doing this is pretty savvy and thinks he knows what he's doing, but color me a little skeptical. That's all. So I've lost a bunch of money on Kohl's this year. So I've been playing it wrong pretty much every step of the way. The 1x2s were smart when I put them on last week or 2 weeks ago, because I didn't think it could ever go for above 62.50. And all my 1x2s are like, you top off at that. So like they're 52.50 by 60 or 55 by 62.50. If the deal gets done, I'll make some money. If it doesn't, at this point, I'll lose a little bit, because they have value now, because all the options have collapsed above 60. But we'll see. We'll see. If I had to put odds on it getting done, I don't know. It's probably 65%. Seems about right. 2/3 of a chance getting done, 1/3 of a chance of breaking. I don't think they would have gotten to the point of press releasing yesterday if they weren't fairly confident in the financing being there. If it was just Kohl's talking to us, then I would be concerned that they're trying to just tell a story so that when it breaks, they can say they tried. But the fact you have another public company involved, they don't have any incentive to string along their shareholders, especially now that their shareholders like it. So I would say the stock should be higher than where it is today. It probably should be 47, 48, maybe 49. That's probably the right price today. So that's Kohl's. I'll answer any questions if you want on that later. Twitter, of course, is the more interesting one for me. And I didn't do a YouTube, but when HSR expired, and that was obviously positive, though the real risk with the regulatory side of Twitter is that the US government comes up with some sort of weird way to block this, or another government does, UK or whatever. And currently the thought process behind the bears is that CFI US, our favorite from Magnachip, CFIUS, will come up with some way to block this. Either they'll say you can have a Saudi Arabia group be involved in the buying side, or they'll say that Elon is too close to China and it's too dangerous to let Elon buy it since he's so close to China. So I'll take one of those at a time. So the first one is a non-issue. Twitter has the right to kick out anybody from the group that could prohibit it from closing. So if CFIUS comes around and says, we don't want Saudi Arabia owning this, some small position, by the way, it would be like a 3% or 2% or 4% of the deal, a passive investment, then Twitter can kick them out. So that's not an issue. Now, on the second thing, it would be unprecedented and pretty much impossible, I think, for CFIUS to block Elon Musk, a U.S. citizen with national security clearance due to SpaceX, because they're worried about China having undue influence over Elon Musk. So the Washington Post had an article about this, but buried in the article was there's no regulatory framework or precedence for them to intervene outside of asking questions about who the other buyers are in his buying group. So not concerned about that at all. I am concerned about some government coming up with a way to stop it. So kind of something that is unseen, or that was always my concern with Twitter. It was why I didn't get involved at 50 as an ARB. More interesting, of course, is what came out yesterday, which Mr. Musk put an SEC filing with a letter from his lawyer saying that they have denied him access to their data to corroborate the amount of bots that they have. And he needs it in order to get the financing or close on the financing. And that breaks the merger agreement. And he was putting Twitter on notice that if they don't give him all the information he needs, he might break the merger agreement. So been some spectacularly bad takes on this on the internet and on people that have like tens of thousands of views on their video. So Musk responded to some guy on Twitter that said that this is not a question of due diligence. This is a question of warranties and representations. And if Twitter lied or committed fraud, then he's allowed to get out of it. And Musk responded with correct. And then that guy did a YouTube video that's 6 minutes long that is just filled with inaccuracies. I mean, flat out wrong things. So first, Twitter is supposed to provide Musk with any information he needs to close the deal. Any reasonable information he needs to close the deal. You then have to ask yourself, if a bank has come to Elon and said, we now, for some reason, think that there's a spam problem and we want more information on the spam stuff before we're going to agree to the financing that we agreed to 5 weeks ago. Okay. The crux of where this is all faulty is that nothing has come out or new about Twitter's spam problem from April to June. Okay. In their 10K, they said that they estimate 5% is spam bots. And this is a number they've used for years. Right. So, hold on one second. I got to close this door. It's closed. I just have to listen to my kids. So Elon Musk did not come to a conclusion a week after he signed the deal that there was a spam problem that was more material than he thought there was before he signed the deal. Okay. This is a made up issue. Full stop. completely arbitrary, made up bullshit issue. Okay. He does not actually think that Twitter's business is materially different or at all different than he thought it was in April. He's using this as a tool to try to get a recut or a walk. I don't think he cares which one happens. Okay. But he has no stake in, there's no harm in him doing this, right? It doesn't cost him anything except for lawyer fees. And he wins by, as a narcissist, he gets the world's attention on himself. And if the deal ends up closing through either lawsuit or just voluntarily, then he created more eyeballs for Twitter as a result, and he ends up just paying the $54.20 he paid before. Okay. The letter or the SEC filing is hilarious, of course, because they're trying to scare Twitter shareholders into thinking that it won't be the spam bot issue that he'll win in court with. It'll be that Twitter didn't provide him with the information he asked for, which by contract they must do. So if this goes to court, they're saying in this filing, we'll win because you did not follow through with that part of the merger agreement. Okay. They're completely grasping at straws. Nobody in their right mind thinks that Elon Musk needs raw user data on Twitter to close the merger between now and, merger close. The general idea that you need from the company is it's for regulatory purposes, right? Ways to assuage a regulatory body about either antitrust, usually it's antitrust, right? And no judge looking at the entire picture here is going to think that Twitter breached its contract by, Matt Levine says this much better than I do. So you should subscribe to Matt Levine on Bloomberg's newsletter. And he did a whole thing on it yesterday about basically Elon Musk would not stop at any level at the number at the data he'd ask for. So for instance, he might say, I want the phone number of every Twitter user. I need to call up every Twitter user and find out whether or not they're active user or not. Meanwhile, and I need to know if you're counting them as an MDAU before I call them. Should Twitter give him that information? Of course not. He doesn't work for Twitter. It's privacy issues. And he's proven time and time again that he breaks non-disclosure agreements, right? He's a complete wild card in what he could do with user data that Twitter can give him. So the reason why they're hesitant to even play games with Elon on this is they know it's a lie, it's a fake issue. So you can't assuage him that the spam thing is really what they say it is, because he'll never take that as an answer, right? He's using this as a mechanism to get a recut or to get out of the deal, mostly to get a recut because he knows he can't get out of the deal. So it would be like negotiating with, my child over bedtime, right? There's no reason to negotiate with the kid because, I can't win. I just have to basically tell him this is when you're going to sleep. And what Twitter's saying is this is what the situation is with the spam bots. I'm sure they attempted to explain to him how they came up with this originally back in mid-May. Elon wasn't going to be happy with it because if he's happy with it, he can't get a recut. There's no issue for him to focus on as why he deserves a recut. He can't say it's because social media stocks went down over the last month, right? So that's where we are here. So I bought a lot of stock yesterday in the pre-market. You can ask anyone that follows me on Twitter. And I sold it all when it went back to 39.50 yesterday. So I still have my original position on. And the only shoe left to drop, the only two shoes that are left to drop with Twitter are as follows. So the first one could be a major regulatory thing that pops out. And again, it's a real risk. I think ARBs are undermining it. ARBs have it at like 5% or 10% or whatever. And I think it could be much higher than that. 20%, maybe. So we could wake up one day and find out that the UK government or CFIUS or something is going to try to stop Elon from acquiring Twitter. The second risk, the other shoe to drop, is Elon terminating the merger agreement and then it going to trial. I think you might even see the stock trade up on that because the case is such a rock solid case. And that just accelerates the time to close. You're probably not going to see any lawsuit until Twitter gets the rest of the regulatory clearances, which is really just CFIUS and UK. Some people don't even think they even need UK, but regardless, the CFIUS needs to happen, and they also need to get the SEC. They need to get their proxy declared effective by the SEC so they can place a shareholder vote, right? And that could still be a couple months away. So you're not going to see much news flow out of this, except Elon kind of saber rattling and possibly something on the regulatory side. So I expect the stock to kind of trade around this range over the next couple months. Maybe it goes into the low 40s. But the beauty of it is you saw it go back to where it was after the SEC filing. The reason why I instantly bought it was that every incremental thing Elon does to saber rattle has less and less of an effect on the stock price, right? He could tweet pretty much anything he wants. He could tweet right now, I don't think I want to own Twitter anymore. And it would go down like probably $1 and then go back up to where it is right now. Because it's pricing in, what Elon's game is right now, which is I want a price cut. I am going to do everything I can to get this stock price as low as possible so I can get the board to agree to it, right? He wants this stock down to be $30 right now because then 45 looks really good to a board. And he's not succeeding, right? He's not succeeding. So the final thing, I'll answer. I see there's some questions. Like I think Brandon's on here. Hi, Brandon. The final question that I get a lot on this is the financing aspect. And there's a guy on Vic that seems to think that it won't close or it might not close because Twitter's business is going to deteriorate so much between when they sign the deal and when it closes that the banks are going to pull their financing because it won't be solvent. There's a test that every company has to do when they go private. And if you can't close a deal, if the minute you close, you can't service the debt and you're going to go bankrupt basically. And I think this is absurd. The banks knew the quarter one numbers when they agreed to the financing in the end of April. And while Snap's business has deteriorated rapidly in the last 5 weeks, Twitter and Snap are not the same business. And Twitter is a much more mature social media company and also appealing to a different demographic completely, and also gets most of their revenues through different forms of advertising. But Twitter has the tools to control costs as much as they need to over the next 6 months to make sure that the EBITDA and the cash flow are relatively in line with what they were when the banks got the original financing done. And that's really all that matters. So it'd be to make sure the leverage ratios are intact. So that holds no water to me, that all of a sudden the banks are going to, and also the other bear case is that banks are going to follow what their client wants. Client has no interest in closing anymore. So the banks are going to say, okay, well, we're not going to provide the financing anymore. Twitter has a host of legal measures they could take, suing both Elon and suing the banks for specific performance, because you can argue that it's all fraud. That's not the reason why the banks are getting out. They're not getting out because they're pulling the financing because they're worried about the leverage ratios. They're getting out because their client told them to get out. And the banks are party to the financing agreement with Twitter just as much they're party to it with Elon. And Twitter will sue Elon and the banks to close. And I think they'll win. So, it's all just a lot of noise. So what did you write here, Brandon? At what price Elon stop the game to transact? So you want this at 45, at 50, get it done? I don't think he cares at all. I think he thinks it's a game. And I think he would take probably 52. Honestly, because if 52, he got some money he saved for doing nothing. He's not even legally entitled to it. There's no reason for the banks or for, sorry, not the banks. No reason for Twitter or for Elon to stop saber rattling until the regulatory is done. Twitter's never going to agree to a price cut until regulatory is done because he could just do it again, right? The only way you agree to the price cut is if you can close within a week after the price cut's done. So I think it's kind of a moot point about what price Elon would take. I think his lawyers have told him that he has a terrible case. And I think Elon knows he has a terrible case. But there's no cost to him to doing this. It's like tens of millions of dollars, kind of thing with lawyers on a $44 billion deal. So it's a circus. It's a clown show. And I mean, it's great, right? It's like the best theater ever. It's one of the best merger arb situations I've ever seen in my career. You have a guy he's trying to buy a platform called Twitter, and he's on the platform tweeting about how much he hates Twitter. And he was even making fun of the lead attorney at Twitter. And the company can do nothing about it because they agreed to let Elon tweet about the deal when he signed the deal. I mean, you can't make this stuff up. It's a fantastic. It's the greatest drama ever. It's 10 times better than the Johnny Depp Amber Heard trial. So, and he loves it. The guy loves it, right? Because he can't lose. He can't lose. The whole world's on him. So if it ends up being that he closes at 54.20, he created unbelievable drama for his new asset, Twitter, right? So kudos to Elon Musk. I know what you're doing. Have some fun. It's got to be, you enjoy being the world's richest man. Have a great time at it. And yeah, I think the issue will be that if they have emails with Mythic management saying that they believe the bot problem is greater than 5% versus what is reported in filings, not a lawyer. Okay, so this has been discussed very in detail by Andrew Walker and other people. I don't think people understand how hard it is to get a Delaware judge to break a merger contract, right? It's only happened, I think, one time with Acorn. And then right after that, it went bankrupt. Literally went bankrupt right after the deal was broken. So it's not so much that the bot issue might not be more than 5%. First of all, in Twitter's own filings, they say they just use a bunch of assumptions, and that's the closest assumption they can come up with. Okay. You would have to prove that Twitter is a fraud, basically. If it's not 5%, it's 20%. And they've been lying to both shareholders and to advertisers malignantly for years. And it's a cover up through many layers of Twitter management. Okay. If Twitter did do that, first of all, they didn't do that. Okay. It's ridiculous to think they did that. Okay. It's even Jeffries had on a former Twitter employee. They did a key opinion leader call yesterday. And he said when he worked there, he thought the 5% number is reasonable. Okay. That was an insider who's not there anymore. But anyway, they didn't do that. But let's say they did do that. Okay. First of all, then Twitter definitely will do a recut of the deal because they won't want to get to trial where their emails come out that says that they have been fraudulent, like materially fraudulent, to where they can go to jail, right? I mean, the smoking gun would have to be like an email to a management member of Twitter that said, I want to put this on the record that I think that, it's not 5%, it's 25% or 20%. And we're ripping off our advertisers and we're committing fraud and we need to fix this. That would be basically the kind of smoking gun you would need because it's inherently very hard to estimate this number, right? In theory, only Twitter knows who an MDAU is. So Elon and the armchair lawyers on Twitter think you can go to his account or someone's account and see the number of followers, take 100 random followers of that person and see how many are fake, how many are real. Okay, that's one way they think you could do it. Of course, you can't do it that way. The second way they think you could do it is you look to see tweets. You look at random 100 tweets to Elon Musk, and you see how many of those people that tweeted Elon Musk are fake. The problem is you don't know if Twitter's counting those people as MDAUs. Just because they are spamming over the course of that day hundreds of tweets for some Discord chat doesn't make them an MDAU. Only Twitter knows who counts as an MDAU. But the most important thing is that if advertisers are measuring the return on their investment when they do a campaign on Twitter, and they know what their ROI is, either based on actual products that have been sold, or if it's branding, it's obviously much more difficult. But companies know how to measure brand awareness and brand, reflexivity when they do an ad campaign. But the really easy way to do it is you measure sell-through or buy-through, whether it's like, there's so many different things you could advertise for on Twitter. It could be for selling a product. It could be for, some pay-per-view event, whatever the hell it is. You can see how it does versus your pay, what you put up, whether the ROI is there or not. If the ROI is not there, you're not going to keep doing those campaigns. So you actually don't give a shit what the actual number is of fake users or not. You just care if you have a good ROI. So they would have to prove in a court of law that Twitter's business is going to be materially affected by the fake 5% number that they've proven was a malignant lie. And Twitter will then show you in court how they came up with that 5% number. And I can assure you they'll have a decent argument for why they came up with the 5% number. Again, this is all made up. I can't even believe we're even talking about this. He does not care about the spam problem. He literally just made this up to 2 weeks after he signed the deal because stock market started plummeting and Snap started plummeting, right? You might as well be talking to me about how he decided that he thinks that there's a rape culture in Twitter, that the top 20 employees have been sexually harassing and potentially raping staff members. And he's concerned about closing because the culture there is toxic due to all the rape. And, he didn't do the due diligence on this, but Twitter should have disclosed the massive rape problem that they have throughout the ranks of its employees. And until Twitter can satisfy his need for proof that there's not massive rape going on at Twitter, he needs to speak to every employee personally about whether they've been raped or not. Because what he's heard is that there's a lot of rape going on at Twitter. Until they can be sure of this, and if they won't provide them that information, well, the banks might not provide the financing because the banks are very worried about this whole rape problem too. All they want to do is, do what he needs to do to get the bank sign off, is call every employee and ask if they've been sexually harassed and or raped. You get what I'm saying now? You know how absurd that sounds, right? So it might as well be that. He just came up with the best and the only avenue he had, which is that, wait, what? There's a part of the filing that says only 5% of their users are fake? Well, let's go with that. There's no way that's true. And, here we are. SEC hates Elon. Maybe they bless it sooner than later. Yeah, Brent, right. They're laughing about this. If you hate Elon, you want him to own this. No, Elon gets out of this. Elon pays $1 billion dropout fee. So again, this is what, and no offense to you, Calabi, the armchair lawyers on Twitter do not understand. Elon cannot pay a $1 billion fee to get out of this. That's not how it works. The breakup fee is for specific, unique things, like if the deal's blocked for regulatory purposes. There's certain things that if they happen, he has to pay $1 billion to Twitter for. Regulatory would be an example. Okay. But you can't pay $1 billion to get out of the deal. It just is not how this works. It has the word breakup fee in it. So it seems like that's how it works, but it's not how it works. So what happens is Elon wants out of the deal. Twitter says no. Elon says, fuck it. I'm not paying you the 44 billion. Twitter sues him for something called specific performance, which in this case is closing the deal at $54.20. It goes to court. The court case does not take 2 years. The court case takes about 6 months or less. Okay. A judge hears the evidence. Elon says, I don't want to get out of this deal because I think there's a material adverse effect, which is that they lied. They're committing fraud. The business is a fraudulent business. They say there's 5% bots. I think there's more. The judge says, what changed between April when you signed this deal and said you want no due diligence and May when you thought that? And Elon's going to say, I don't know. Nothing's changed. I knew about it in the filings before, and I just now think it's fraudulent. The judge is going to say, well, why? And he's going to say, well, I've looked at 100 of my followers and 30 of them are fake. That's 30%. And I know how to launch rockets into space, so I'm smarter than you. So that's why. And then Twitter is going to say, do we even have to put in the case, judge? Or can you just tell me he has to close at 54.20? And the judge is going to say, yes, close at 54.20. And that's going to be the end of it. Are you protecting your decision-making from your animosity towards Elon Musk? In my life. So I really don't have, there's no reason for me to vendetta against Elon Musk. I think he does seem like a pretty unsavory character, and I don't like his politics. But yeah, no, I get involved in stocks to make money. Someone told me a long time ago, a stock never knows you own it. So there's no loyalty to a company. I know I joke about loving Magnachip so much and all this stuff, but Magnachip does not know I own it. It doesn't care. So with Twitter, if it went to $45 tomorrow, I probably would sell every share of it. I wasn't involved in it when it was $45 before it went to $36, $6. There's a right price for everything. And in this case, the right price is higher. It probably should be $42, $43 right now. And it's 40. So I'm holding it. Any other questions? These are all good. And look, the business could end up really deteriorating over the next year, 6 months as the trial comes, and there's some issues with the financing. All these are real risks. I just know that Twitter is bloated with that, and they should be able to manage the cash flow with no problem through layoffs to keep the financing part intact. And I would be more concerned about this idea if I didn't see how transparent Elon Musk is in all of this. I mean, for instance, if there was something in the merger agreement that said, and every merger agreement should have this going forward, by the way, if you refuse to close and we have to sue you, and we have to go to a court and it takes 6 months, and the judge rules in our favor for specific performance, you owe us another, $5 a share. $5 billion or whatever it is. That might keep people from suing or breaking deals, right? If it had an actual cost involved. But there's currently no cost involved. And he's an egomaniac. He loves this. Any hope for June OpEx? I mean, sure. That's just 10 days from now. I would think, though, Glenn, that if it was going to come together super quickly, they would have just announced the deal. I mean, I guess there was some element of a market test here with the buyer to see what happens with the buyer stock, I guess, and it passed with flying colors. So it could happen pretty quickly. Twitter up 20, MX up 20. MX really not much better a situation. The difference between MX and Twitter is way is so numerous. I don't even know where to begin, Glenn. So for MX, I think a deal could happen within a matter of days to weeks. right? Days to weeks. 2, Twitter is months probably away from resolution. You need regulatory to clear, and then you need either a price cut, Elon to agree to close, or a lawsuit. So it's kind of deadish money for a couple months at least. Okay. 3, if Twitter does break, and the only way I think Twitter breaks is the board lets Elon out with a larger breakup fee because they're worried about the deterioration of the business. But if Twitter does break, Twitter could go to $25 to $30 a share. If Magnachip breaks, I think Magnachip will be $15 or $16 for like a hot minute. So yeah, there's 25% downside with Magnachip. I think there's more than 25% downside with Twitter. And I think that the odds of Magnachip having a deal in the next few days, the next few weeks are high. 75% by July OPEX. And I think you might get shocked at the price of the Magnachip deal. It could be $27, $28, $29, $30. There could be other bidders involved. I'm hesitant to do this again, but I can't overestimate the difference between $29 in March in 2020 and $29 today. First of all, the US dollar is probably worth like 7% less than it was worth in March of 2020. Just inflation alone, that $29 is probably $31 today. Then you add the breakup fee, then you add the buyback, and you get to like $33, right? Maybe even $34 today for the same price as March 2020. Further, you have a huge secular move that's going to happen in their business starting in the second half of this year when the supply comes on board. And that should last all the way through 23 and 24. Okay. So to me, the idea that 25, 26 is where it's going to come out, which if you adjust for March 2020 is like 22 versus 29 with $7 a share in cash. From an enterprise value perspective, it's like 50% less they're paying or 40% less or something like that. And, you know, I think we might be really surprised at what the price ultimately is. So, you know, on the flip side, Twitter is very liquid. It's fully marginable. But I think they're very different opportunities. But yeah, I own both of them, right? But Magnachip's just much bigger for me. And I'm cognizant of what the Magnachip risks are. And I'm comfortable with them. So I'm very much hoping that we could do a celebratory Magnachip in the near future. But I have no, you know, insight. The closest insight I have is that the last 2 times that the newspaper that broke the pricing on Carlyle and LX put out a report about Magnachip, it became true 2 to 3 weeks later. First was the Wise Road deal, and then the other one was when they sold the foundry and the fab. So that gets us to soon. But if they really just did a preliminary bid in the middle of May, it could take 6 weeks for that to come to a conclusion, which would be the end of June. So, you know, we're in the window. We're very much in the window. For my June calls, I hope it happens in the next 7 days. But I wouldn't risk my life on it. I think it's a powerful illusion. We have to believe that we know what's going on in someone's head. So to protect one's portfolio, I would caution against doing that with Elon in particular. I'm not doing that. I'm just going by what the law is. I think people just don't seem to understand this. He doesn't have a decision here, a choice to make. You know what I'm saying? He can't just make it. It's not up to him. I'm betting that this goes to a lawsuit and they win, or in a much lower chance, he closes on terms once regulatory clears, and also a much lower chance that the board cuts him a few dollars off the price and they close before regulatory closes. That's it. I don't care what's in his head. I'm just looking at the law. And if anything, I'm actually giving him a lot of respect. I think that what he's doing is genius. He can't lose. He's creating all this hoopla for himself. He either gets a price cut or he doesn't. It doesn't cost him anything. People love him. His fan base loves him. I have a lot of respect for the way he's handling it, which is, it's a clown show. Did you really just ask me, Glenn, if I still like MX? I literally just spoke about it for like 10 full minutes right after you wrote. Did you like get a phone call or something? I literally answered your question about the Twitter up 20, MX up 20. Is MX really that much better situation? So I guess rewatch the YouTube for the last 10 minutes and you'll get my answer there. Yes. Oh, I see. Got it. Never know with you, buddy. I don't think MX is that mispriced at $20. I mean, I obviously think it's undervalued. That's why I still own so much of it. But you have to, again, keep in mind that if it gets a $25 deal, it might only trade the 22.50. Oh, I like XBI a lot, Luke. I don't own it yet, again, but I just can't keep my eyes off of it. Yeah, I'm very constructive on XBI and biotech in general. So as I told you guys in the previous YouTube, and it's done really well, I own MYOV. That's my biggest biotech position. They got a major amendment, and I think it gets sold at some point in the future. It's up 9% today. Another stock that I think is really, really interesting that you guys should put on your radar is AMLX, which is the very, very controversial biotech that had a negative adcom for super, super terrible disease. And it got decimated as a result. And they just got a major amendment. And people that are much better at this than I am think that it's too controversial of a drug for ALS that the FDA will be forced to approve this. Very much like eteplirsen from Sarepta many, many years ago. For the few of you that know me, know that I was involved in that in a big way. And this to me is that all over again. And what I think the market is doing wrong here is that the stock's $12, up from like 9 before the major amendment and down from like mid-20s before the negative adcom. And if you assume it just goes to 20 on approval, which I think is pretty conservative given I think what this drug, is capable of doing, and also market cap, and again, where it was trading before. Oh, Twitter's popping. Thanks, Zeb. Twitter tells employees it's targeting 13 million MDAU growth this quarter. Well, that's great news. So the business is still performing great, and Twitter's popping on it a little bit. That's great. So AMLX, sorry. So let's say it goes to $20 if approved. I think it can go higher than that. And let's say it goes to $3 if rejected. So to make it easy, whatever, let's just say $21, $3. Let's say it's 9 up, 9 down. So the market is pricing in a 50% chance of approval. Where I think the market is wrong is that major amendments, as everyone likes to know, probably mean it's closer to a 90% chance of approval. It's somewhere between 80 and 90%. And something this controversial, the FDA would want to just get this behind them, and they would have just CRL'd it, I think, at the end of June, versus taking more time to kind of come up with their rationale for approval, which is what I think they're going to be doing. So is this 80 to 90%? I don't know, but it's definitely higher than 50%. I don't own any common in it. I was able to put on some November call spreads for, they were implying 13% or 14%. Yeah, I got really, really lucky on some November call spreads. I put on, they were 1750, 22. No, they were 1750, 2250 call spreads. And I was paying like 80 cents, 16%, whatever it is. But yeah, you need the stock to go above 2250. I think it definitely goes above 2250 based on where it was trading before. And by the way, it was trading before, that wasn't pricing in approval. That was pricing in, odds of approval based on the AdCom going well and the briefing docs. So if the briefing docs were great and the AdCom went well, it probably would have went to the mid 30s, is my guess. Is there anyone you recommend following the biotech space? The best two people on biotech by far are Sheep, which is Sheep of Biohazard 3737, BIOHAZARD 3737. I'll put that down here for you. I'll show you. That guy, and then the goat of all biotech is Sport Bios. He doesn't tweet very much, and he's not going to really give you a lot of ideas, but when he does, he's almost always right. The guy is like a legend. And I know Biohazard 3737 in real life. Sports is such a legend. I don't even know his first name. Some of these guys are so anonymous, they won't even tell you their first name. So I speak to him through DM sometimes, but I have no idea anything about him. I think he's Asian. He lives in Asia, his family in Asia, but that's all I know about him. That's known on the internet. So yeah, I think AMLets is interesting. The other idea that I like, which is a new idea, oh, it's already moved a little bit today. Look at that. Is Toma, I'm gonna get that right this time. Toma Bravo shocked the world yesterday when they recut their price for Anaplan, ticker PALAN, and that sent another LBO they have, which is ticker SAIL, SAIL, down 5%, and that's a 65-25 deal that's currently trading at 63. It was 62.50 when I started this YouTube. And I think it's crazy to think that Bravo is going to be able to recut that deal too. We don't even know why they recut the Anaplan deal. It could have been an actual reason for it. And I don't think Bravo is going to now go to every deal they have pending and ask for a 4% cut. So I like that as a place to park some money with an extraordinarily high likelihood of closing at 65.25. And if it doesn't close at 65.25, it'll probably close at a 5% haircut to 65.25. Again, I put the odds of that at less than 10%. Less than 10% chance of price cut, 90% chance closes at terms at 65.25. Love the move in MYOV. Love it. Love to see it. And we're still waiting on SHLX. Just keeps going up. I haven't sold any. I'm in that till we get the price. That could happen any day. The other thing to keep your eye out is Unicor. I don't own that anymore on my account for margin reasons, but I own some of it in the family account. And they're going to have their updated Huntington's data this week. And the stock blew up last time on Huntington's data. So if this is even marginally positive, it could go up huge. So we'll see what happens. That's up 7% today too. All right. I think we're good, right? Anything else, anybody? Thanks for joining. That was a long one, an hour. I'll be on next time. I can't come on every time something happens with one of these names, but I'll be on next time. What's your AIM and track record? I think you meant AUM. My AUM is just my own money. So I don't disclose how much money I manage for myself. My track record is extraordinarily volatile, but very, very good. I've been posting my ideas and my returns on Twitter in real time for the last 10 years now, I think, maybe 8 years. And I've been doing this professionally for myself since 2008. And I had I was a part of a co-partner of a small hedge fund before that. And then I worked at a hedge fund before that. But since 2008, it's just been me doing this on my own. And it's been 14 years. And uh, it's a very good track record. It hasn't been that great since 2009. Sorry, since 2019, it hasn't been that great. But I'm working my way out of it. I'm working my way out of it. Every day is a new day. I'm up this year. Probably about 5% versus what the market's doing. And last year I was up, I don't know, 50%, something like that. You love me. Thank you. I wish we still had AIM though, but maybe Twitter wouldn't be what it is if AIM was still around. Yeah, right, David? It's true. Could you please add me to your Twitter account? Big fan. What's your name, Fernando? You got to send me. You got to tell me your. You got okay. You got to tell me your handle, unless it's obvious, and I'll add you. Yeah, just put it in the comments, Fernando. All right. I hope we're popping champagne soon on Magnachip, people. Let's do this, and then we're going to Vegas. Remember, Magnachip Vegas trip within a month of a sale. So be on the lookout for YouTube. Take care, everybody. Have a great day. Thanks for joining.